Welcome traders, welcome students, online trading campus students to our practical application lesson number 3. Today we will talk about the location. I want to continue location one more time because I found a nice zone here. We can talk a little bit about it and more. Okay, but first let's start with location. I will show you how I start with my location. Remember, that's our step-by-step guide, right? That's our process. Location, direction, zone refinement. Okay, these 3 elements. For also zone qualifiers, we will talk about zone qualifiers later. Okay, here let's start with location. How and why we are start with the location. Location is a tool that shows us where is the current price and not where 146 or 130 means in the location of expensive and cheap. Okay, we have the very expensive area, we have the expensive area, we have the equilibrium area, we have the cheap area, and we have the very cheap area. Okay, and of course we wanna select perfect. This is a tool here. 1 second, text. Could I? Very expensive is, of course, you want to sell the price, right? Expensive also. Equilibrium, we want to do nothing here. Cheap area, we want to buy, and here also. And that is the idea, guys. We are looking where is the current price, 146.501. If we are in one of these areas, and the first step is to look for zones, and we talked already about the drop-based drop, rally-based drop, rally-based rally, drop-based rally areas. We have only these 4 levels, okay, or 4 zones, and that's our job here. We will start with the location. We use the horizontal line, and for example, we will start with supply. You can also start with demand. Okay, for supply, we are looking above the current price and to the left, and we are looking for supply areas. That means we should cross with our horizontal line to the left a leg out candle, and the leg out candle could be an explosive or decisive candle, right? Remember on the slides, we have the we have to hit the supply the leg out with explosive candles or multiple decisive candles. And look at this here. We hit this zone, and it is a huge. Or we hit the leg out candle. It is a huge drop. Right, a huge drop. It's definitely explosive. It is also a real drop. Remember from the other from our latest lesson, it is not only a drop-based drop. A drop means not only it is a red candle. No, it is a drop, a price drop, a significant price drop. Okay, hit the zone, we cross the leg out. We have 1, 2, 3 indecisive candles, and we have a clear rally here to the left. That means that is our zone. And don't forget, guys, change here a little bit. Location is our tool. Location is our tool on higher time frames. Okay, on higher time frames. Snap mode on, higher time frames. And here, look where we are right now. Okay, is this a snap mode? No, not now. This is our supply zone. Is this valid or not? We have rules here. We have different rules for supply and demand. And should we talk about this now or not? Wait. Yeah, let's talk about it. It's a little bit my style. It's a little bit my interpretation of supply and demand and location. Maybe it's a little bit different, but I will explain why. Okay. We have supply here. And what means supply? Supply, we expect here unfilled institutional selling orders. Okay. That means, okay, we expect in the indecisive candles here, right, more institutional selling orders, unfilled orders. It means if we come back to the zone, we expect again the drop here, okay, again a drop. And here, look, we got already a little bit. We'll check this. Oh, undo. Okay, undo is better. Let's check this area here, okay? Look, we never hit the zone, okay? We never hit the 145.113, and that's a wider version. Plus, again, zoom in, we have space. That means the zone is completely fresh. It is completely fresh? No, not really, right? Because we tested this already right now. We are still in the zone. It is already tested right now. Is it okay or not? I have multiple, or I got these questions in the past. Oh, okay, but we are right now in this area. I have to check fresh levels right above and to the left. No, it's not necessary. We are right now here. Perfect. We're right now in the area we want to short. Okay, we're in supply. That's perfect. That means more like, okay, we have not really time to looking for short opportunities. We are right now in a short opportunity. You have to, or you should to press a market sell button. Don't do it, right? I'll explain this later. But we are right now in the supply area. You can short the current price, okay? Here, my recommendation is always on the higher time frames for location. Never move from or use the preferred version, okay? Don't forget that is a wider version and snap mode on, that is a preferred version. We explained this, or we talked also about this in the last session, last lesson. This is a preferred version. Why? Our location will be never our tradable time frame, okay? Location is a higher time frame. Execution is a lower time frame, the small brother. That we're using only the location to calculate the current price, if we are cheap or not. That means my recommendation is always use the wider version, and that means, okay, we are definitely in supply right now. We don't want to short this zone here. We want to refine the zone later, okay? That means, okay, is a supply. Let's check where is our next high quality demand. We can use, again, our horizontal line, go to the left and below the current price. If we hit, or should we hit leg out candles, we are looking for demand areas, rally based rally, drop based rally. We hit here not really a decisive zone, and should be, or a decisive candle. For example, this is a decisive candle. It's not enough. We need multiple decisive candles, right? Yes. Check the blueprint again. Then an indecisive candle, that's not possible here. And here we hit a clear explosive candle. Perfect, right? That is the candle we need. Previous candle indecisive, previous candle indecisive, previous candle decisive. It is a rally. Perfect. We found our demand zone. And here it is the same. Snap mode on. Again, guys, it is here. We are using, I'm using the wider version. It makes no sense to refine here anything, because we will never short or buy these areas. We want to refine the zones. That means, guys, that means that's very, very small. We have not really space here. Pop. Pop. What was it? I forgot. It is 33 and 66, right? 33, 66. Yes, perfect. That means, look. Okay, that means, don't forget, we have this different levels. This is very cheap. Okay, the whole demand area is very cheap. This one is cheap, and both you want to buy, right? You want to buy the very cheap and cheap area. That's the equilibrium. Don't want to do here anything, nothing. Okay, nothing. It's not allowed for us to buy or to sell. And this is the expensive area. And of course, that is a very expensive area. And that means we want to sell the price. And now our job is to have to check where is the current price? Where is the current price? And which of this 1, 2, 3, 4, 5 areas, 5 zones is the current price located? And it's definitely in the very expensive area, right? Very easy. Look where it is. Here we are in the very expensive area. That means very expensive means we want to sell the price. Okay, that's it. That is location, right? Very easy. It means, okay, the price is definitely expensive right now. We could refine the zone, but that's the next step. We will talk about direction now. Okay, talk about direction now. What I have to do here, what makes sense? Let me remove this one. You can create another workspace, right? For example, here, this is your location workspace. Then you will open a new one. Okay, here below, this is only for direction. And then you can open also a new one here on this. Wait, 1 second. Draw on. You will add here. This will be your direction. This is location. And don't forget, higher time frame location, higher time frame direction. And you can open another one here. And this will be your zone refinement. Okay, that is that's another workspace. That's very easy then. Okay, I will work only in one. In this one here, it's easier for me. I will remove this one here very quick. You will keep this, of course, and then we will start with location. To make my notes, direction, sorry, direction. What is direction? Direction means pivots. Pivots. That means highs and lows. These are pivots, okay? Turning points. And what is a pivot? That's very easy, okay? Check the chart. You can check also any other assets, and then you will identify clear, significant highs and lows. That's definitely a pivot, right? This is here definitely a pivot. Here also, look, a rally after that, right? That's definitely a low. This is also a low. Here, this is a high. This is a low. This is a high, right? It's clear pivots, turning points, right? Turning points, rally, drop. In the middle or between is the pivot. Here, drop, rally. In the middle is a pivot. Rally, drop. In between is a pivot. One more, drop, rally. Here between is a pivot. Okay, And the direction tells us, okay, institutions, they put money in the market long term, right? They bought the US dollar Japanese yen here, and then look, it's weeks, right? Weeks and weeks and weeks. Every single candle is a week, bought and bought. That's a direction, right? It is a clear direction, and that is a direction to the upside from here. A clear direction to the upside. Here it is completely different. A clear direction to the downside. From here to here, clear direction to the upside. And we want to check, we want to follow this directions long term, okay? Because it's very easy. We see the institutions buy the US dollar Japanese yen since here, one second, move, since the beginning of 2023. They bought it, right? They bought it again and again and again. That make absolutely sense that we buy also. We could expect that price will move higher and higher. That's important. And you will check, we have different types of trends. Okay, trends means direction. And we have text. We have, it will start with an uptrend. We have an uptrend. We have a downtrend, of course. Then we have sideways, and we are trendless. Oops. Trendless. Okay, sometimes we're in no trends. These are our 4 trades. We have also the anticipatory up and down trend, but that's more for advanced later. Okay, not necessary right now. We're using a tool to identify the trend, the direction, and that means direction. We'll look from the right to the left, okay, and we will highlight significant pivots, okay, turning points. Yeah, that means back to now. Which one is from the high? We're here right now. That's not a turning point right now, right? It makes no sense to highlight this one here right now because it is not a turning point. This is a turning point. A drop and then a rally. Okay, that's a turning point. Here, it is only a rally. We have to wait for the drop and then, okay, we can say it is a turning point. Maybe we'll move higher, right? More and more green candles and we will get the drop then. Then here is a turning point. We can definitely skip the current area here in this case. Okay, here, this is our, oopsala, clear. It's like this. It is a turning point. Left side drop, right side rally. Here, another one. Left side rally, right side drop. Turning point, right? Go lower here, lower, lower, nothing, not significant. Then what we have here, left side drop, right side rally, great, turning point. Here, another turning point, left side a rally, right side a drop, turning point. Here, what is this? A drop left side, a rally right side, turning point, great. And then what we have here now, if we, oops, connect the pivots, okay, we connect the pivots, the lows and the highs, of course. What is this? The direction is very clear. We move higher and higher and higher. This should be an uptrend, right? This should be an uptrend. And if we check the lows, second, oops, I will explain you what means lows. So we have 2 elements in trends and that are, or 4, sorry, low, high, higher, low, higher, one second. That's so stupid. High raise. Okay, 1 second. I'll draw this a little bit better. Text. That's better. Okay. Uptrend. We have here highs, lows, higher highs means and of course higher lows, HL, and we have also here L, that means L, right, for lows and highs. Okay, that is uptrend. Okay, that means we have highs. Okay, we'll check this here now. Upsala, that's not smart. Okay, like this, and that means what is this? That is definitely a low, right? What is this? This is definitely, oh no, go to the left, wait. That's a low, okay? The first pivot we move. We follow the trend, the connected line to this one. This point here is definitely higher than this low, right? That means it is a high. And we follow the line, boom. That's another point. What is it? This point is definitely a low, right? It's lower than this high, but higher than this this previous low. That means it is what? A higher low. Means HL. Okay. Follow the connected line. Here a new high. It's definitely a high. And it is also higher than the previous high. That's the reason why it is a higher high HH. Okay. And that is the trend. Here another, of course, it is the same, higher, low, HL. So that is a trend. That is an uptrend. Huh? And we have a low, high, higher, low, higher, high, higher, low. That is uptrend. And the higher the lows and the highs, the higher highs and also the higher lows, a little bit different here. Draw color yellow. And look, I extended the line always, okay, here from the pivots to the right. That means, look, the lows are never violated, right? Never violated from the price. We never hit the zone. We never cross the zone. We never was below the higher lows. But on the highs, we violate the highs. We violated the higher highs. And that's important for an uptrend. We have to violate the highs and the higher highs. It's not allowed for us to violate the higher lows and the lows, okay? It's not allowed that price come lower than the higher low. Then we have a trend break, okay? We get trend less than. But here, erase. Undo. Okay, this is a clear uptrend. That means this is a direction. Okay, direction is an uptrend. We have never violated the lows or the higher lows, but we have to break the we have to violate the highs and the higher highs. Very important. That's an uptrend. That means, remember, where is our supply and where's our demand? Okay, remember, we put the things together step by step, slowly. Means we expect, or we are still in an uptrend, and we expect, of course, then more strength, right? More strength. And here, wait, I have to talk a little bit about another thing here. From text. We have a correction and impulse. Okay, we have in correction and impulse in trading or for the direction. Means the way from low to the high is always the impulse in an uptrend. Also from higher low to the higher high is also the impulse. The movement from the high to the higher low is the correction. And the movement from the higher high, of course, to the higher low is also the correction. Okay, that means everything, and in an uptrend, if we get weakness, okay, weakness from the upside to the downside, okay, here from the upside to the downside, that is a correction. And from the downside to the upside is, of course, the impulse. Impulse are always better, they're significant, but it's allowed for us to trade both levels, okay, or both elements, correction and also impulse. That means, and that's a tricky point, we want to short this area. Not exactly this area. We have another step, the zone refinement, but we are looking for a short, right? The location told us we are in the very expensive area. We want to short the price here in this area. We want to find this also, but definitely want to short, not buy. That means, guys, that's important. That means that we will trade what? The impulse or the correction? It is the correction, guys. It is a correction. You want to trade only the correction. Okay, that means we have also an profit margin. If we expect weakness here from this supply, then we trade only the correction. That means our profit margin will be this point, right? The higher low. It's not possible for us to expect more profit margin below the 137.281 because this is our higher low. If we short this area here, we expect that the price drop, but this is only the correction, okay? It's not allowed to violate the pivot, remember, okay? Means we have less profit margin here, or not less, but we know our maximum profit margin here. Okay, I think that is enough for the first time here, location and direction, this both together. Yes, that's fine. We'll talk more in the next session, next week about it. Here, make your own analyze, check the check practical practice all other assets, right? Understand what makes sense, where we are, location, what is my direction, if we're expensive or cheap, okay? What means then if I want to trade the impulse or the correction, which one, right? Yes, that's fine. I will continue also a little bit more. That's also a nice topic. And that means, remember guys, you want to short this area, right? And we talked about it. Okay, this will be, we don't have to violate this one because we are in an uptrend, right? Means also, yes, we have clear supply here. And don't forget, we have also demand. And we are in uptrend. What make more sense? To short the current price here in this area into this area, into the demand. Demand, we expect strength, right? We are also in uptrend. We expect also strength. Or make it sense to wait that we are in this area here in the very cheap area. And we are also in an uptrend. We don't have to, it's not allowed to violate this pivot. That means a stop loss below this pivot, for example, buy this whole area here, or we have a zone refinement, of course, for this, and then another rally. That is also fine. That will be a topic for next week. Should something not really clear here, let me know, write me a message, please, on the from the homepage, and I will put this in my next session. Happy trading, guys. Bye-bye.